Hey, this is Jack over at Dominion. Wanted to record a video here on a very popular topic, how to get started in real estate investing, and more importantly, how not to lose when you're getting started in the real estate investing so that you're out of the game before you even started. First question I think you need to ask yourself is, what exactly do you want to do? What are your goals? Do you want to build a rental portfolio? Do you want to flip properties and sell them to homeowners? Do you want to wholesale as-is properties? Or do you just want to work in real estate and work for other investors as an agent, contractor, or property manager? Once you've decided which of those areas you want to focus on, I think step one, regardless, is to get your real estate license. They teach, it's not the end-all, do-all, but they do teach some very important information. And most importantly, the reason to get your real estate license is that it gives you access to MARIS, which is the multiple listing service, which is really the database that all realtors use to sell properties. And it's by far, it's 95% of the market where most properties are bought and sold. People would say that, well, why don't you just use a realtor? Isn't that what they're for? Really, our opinion is that's really not at all what they're there for. If you're trying to learn the market, real estate agents are there to make money and put food on their table. And when you're just starting to get started, you're not in a position where you're going to make any real estate agents any money because you're just learning. So the best agents are working with seasoned investors who are buying lots of properties. And if you want to learn the market, you want to have the best access to information, which is this multiple list, and so you need to go get that access for yourself. I'm going to run through some overarching set of principles, things that we really believe that we run our business with. And the first overarching set of principles is that you're starting a business like any other, and businesses only survive if they have a competitive advantage, which is something that they do better than anybody else. So your job, if you want to get started in real estate investing, is to pick something that you're going to be the best at and start becoming the best at it. Examples of that are knowing your submarket better than anybody else and what the prices should be, so you can spot a good deal. Sourcing deals that nobody else sees, that are off the market deals, where there's some kind of arbitrage that you can take advantage of. Learning the renovation process and what renovations cost. Learning cost-effective renovation tactics, cheap stuff that looks good, that'll give your property an edge over somebody else's. Learning the ins and outs of property management, which is a more complicated business model than you'd think on the surface. And maybe you just got the best marketing strategy and tactics. You're a great marketeer, and that's going to be your competitive advantage. The question to ask yourself is always, where do you add value in the transaction? And if you're not the one who's driving a particular part of the real estate investment transaction process, then there's really no justification for you to make money in it. So you need to be better, you need to be the best at something in the real estate in a real estate transaction. So pick one and become an expert in it. Step two, I'd say pick a submarket and learn it. If you're going to invest in real estate, you've got to have to pick a geography that you're going to be interested in. And I say submarket here as opposed to market because markets are too big. You need to choose a small area that you can bite off, that you can manage, that you can become an expert in. Examples of submarkets are Cockeysville, Upper Marlboro, the zip code 21205 in Baltimore City. Baltimore City is not a submarket. Prince George's County is not a submarket. Washington, D.C. is not a submarket. Those markets, they're much too broad, and you're not going to become an expert in Baltimore City or Prince George's County or Washington, D.C. when you're starting out as a beginning real estate investor. So pick small submarkets, and then once you become an expert in that, pick another one, and then pick another one, and broaden that in the areas that you want to operate in, because that's the only way that you're going to know the market and know if it's a good real estate deal versus a bad one, and be able to spot that. The other next overarching set of principles is that prices go up and down all the time. The market is constantly changing. And so if you want to be a real estate investor, you need to know where the market is. If you're investing in stocks, you read the stock tickers every day and find out where properties are going. For example, if you're going to be a wholesaler, really what you're doing, it's really a real estate trading business. You're trying to spot a deal that's $5,000 cheap, for example, and find an investor who's going to buy that. The only reason you're entitled to earn that $5,000 in that transaction is if you found it $5,000 cheap. You can't sell somebody a bad deal and expect to continue your wholesaling business. So you need to know what prices are in your submarket where you're going to be wholesaling, and read those reports, those Maris reports, in the morning, just like a trader reads the stock ticker. In real estate, we really feel that you can't outsource acquisitions. If you're going to be operating in a market, you need to know the prices in that market. And really, we really believe that you make money when you buy a property, not when you sell it. You either bought it cheap or you paid too much, or you paid exactly what it's worth. But the sales price is rarely where you're able to make any money. You do it on the acquisition side. Step 3, I'd say pick one business model and learn it. Real estate investing is not a business model. Examples of business models within the umbrella of real estate investing are patch and paint, Section 8 rentals, and 21205. Very narrow. But that in and of itself is a business model. That's something that's a real estate strategy that you're going to. So if you're going to do patch and paint, Section 8 rentals, and 21205, you've got to learn 21205. You've got to learn how to do patch and paint rehabs, and you've got to learn the Section 8 system. That's a lot. That's enough to keep someone very busy. Other examples are different price point, doing a retail job in a particular submarket like Owings Mills. If you're going to wholesale, focus on estate sales in Harford County, and that's all you're going to do is estate sales in Harford County. Boarding houses in 21217, there's plenty of deals that you can do that fit that description. Short sales in Reisterstown is just another example of a specific business model in a specific geography. So you need to pick a business model, whichever one you like, and there's lots of them, and decide which one you want to be an expert in, and go learn that business model so that you are the expert in that particular niche. You have to know what things cost if you're going to be in real estate investing. So much of real estate investing is founded on adding value to a property, and if you don't know how much stuff costs when you're renovating the property, and really at any point along all the points along the real estate investing process, including title work, maintenance calls, if you're going to be working with rental properties, if you don't know what those things cost, then you're going to find yourself someone taking advantage of you. So it really boils down to talking to a lot of contractors, spending time at Home Depot, and really doing a lot of material takeoffs and getting a lot of labor quotes so that you have a good frame of reference, so that when someone quotes you work or going to sell you drywall, that you know that you're not just throwing money away. Otherwise, we really strongly feel that you're going to get nickeled and dimed every time you pull out your wallet, and there's a lot of times when you pull out your wallet throughout the real estate investing process. So it's important to study up on what things cost. Step 4, study your competition. Until you can point out your competition's mistakes, you're not ready to put money on the street yet. You need to be, like I said, you have to have a competitive advantage. So you need to be the best at something. Somebody else is already probably doing something very similar to what you've chosen. Not really recreating the wheel here. And our thought is that rip off and redesign. Pick a submarket, pick a business model, find out who's doing that, and study what they do, and try to tweak it so that you're doing something along the process a little bit better than they are. Someone has already done most of the hard work for you and set up a business. You're rarely going into a new market or a new business model. So find out what other people are already doing and try to improve on their model and incorporate everything else that they've done that they do better than you do into yours. And then you'll have a competitive advantage, and as a result, a successful business. Step 5, you got to find some money. It takes money to make money, and at some point, if you want to put money on the street, you need to come up with that seed capital. So either cash of your own, maybe a line of credit on your house that you've paid off or paid down significantly. You can learn how to borrow hard money, which is something you need to learn how to do correctly. I wouldn't just go sign up for that. Of course, it's always nice if you got a rich uncle or a friend who wants to partner with you. Or you can just sweat it out and just work for cheap, basically. So if you're not paying yourself but you're working, that is creating. There is value being created there. So just pick one of these things, or whichever one is available to you, and use that in your business model to get started when you want to do your first deal. Step 6 is to start looking for that deal. And I would say definitely stick to what you know. Don't go outside of your box. You picked a business model, you picked a submarket, stick to that. Don't go outside of it because you haven't studied up on anything else. And don't reach. There's always going to be another, especially now. There's tons of inventory hitting the market. It's a great time to be in this market. There's no don't let money burn a hole in your pocket. There's going to be another deal. Stick to your numbers. Stick to the criteria that you've set up that you know will be successful, because something will come down the pike. And then, most importantly, plan the entire transaction through from start to finish before you cut any checks, before you start you move forward or put a property under contract. Know how you're getting from A to Z and line it all up before you move forward. And you'll be able to do that quickly if you become the more of an expert you are in the business model and submarket that you've chosen, the faster you'll be able to do that. So that right now we can walk into a house in Baltimore City that we're going to do a rental rehab on, and rented Section 8, and I walk through the house, and within 10 minutes we know what the rehab's going to cost. We know what the Section 8 rent is for the area. We know what the appraised value is going to be, so that we know how much money we're going to have stuck in the deal on the refinance. That's one of the business models that we've gotten very good at. So as you get better and better at it, you'll be able to go through this process very quickly. And then finally, have realistic expectations. If you're just starting out, I wouldn't expect to do a deal for at least 6 months. If you do a deal before 6 months, you have to question, was it a good deal? Can you be an expert in a business model in a submarket in less than 6 months? I think it's very difficult. I think that's a high bar to try to achieve. So it's important to be patient and be diligent, stick to your numbers, stick to the business model that you've learned, and understand that you're learning a business, not a hobby. We do this as this is our profession. We're professional real estate investors, and we're out there competing with other real estate investors. So don't disrespect the business by thinking that it's easy, because you'll find that it'll disrespect you right back, and you'll end up losing money on the deal. So thank you very much. It's just our opinion on how to get started in real estate investing, and not lose your shirt, so that you hopefully can make the transition, if you like it, from whatever your day job is to being a professional real estate investor. Thanks very much. Again, this is Jack over at the Minion.